What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, and I do not offer an investment trading program. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks. When you open a new Webull brokerage account, put at least 1 penny in that account. They're going to give you up to 12 free stocks. There's a link in the description box of this video. Go open that Webull account today. Go get that free stock. Go get that free money. Deutsche Bank is expecting the Fed to decrease short-term interest rates by 200 basis points in 2023 and 2024. The reason they believe the Fed will decrease short-term interest rates is because the Fed has been pretty hawkish this entire year. Already, they've increased short-term interest rates by 375 basis points, and they are expected to increase it by an additional 50 basis points in December of 2022. So that'll be 425 basis points worth of rate hikes in 1 year, guys. And that's the reason why Deutsche Bank believes there'll be a pause, and then there'll be a gradual reduction of the short-term interest rate, like I said, in 2023 and 2024. Here are some things that Deutsche Bank believes could derail the Fed from decreasing short-term interest rates. The first one is elevated inflation. Currently, right now, inflation is 7.7%, which is super high when we should be at around 2%. But we got some good news from the October CPI report, where it showed inflation had peaked. So that was good news. That means hopefully when we get the November CPI report, which we'll get in December, hopefully that will show inflation is continuing to come down. But if it doesn't, and it U-turns and starts going back up, that would prevent the Fed from putting a pause on short-term interest rates increasing. The second thing is labor market imbalances. And here's what I mean by that. If we continue to have more job openings than there are applicants to fill those jobs, then that's going to continue driving up wages. When companies are having a hard time filling their vacant job openings, what do they need to do in order to separate themselves from other companies trying to hire the same employees? What they're doing is they're going to increase wages in order to attract that employee to them. So if I got 100 job openings, I want to have 100 applicants or 105 applicants. That will keep the balance in the labor market. The third thing Deutsche Bank mentioned was the financial condition of the economy continues to worsen. Then that will also prevent the Fed from pausing and decreasing short-term interest rates. More than likely, they will continue increasing. So those are your three things we got to look out for in 2023. Deutsche Bank also believes there's an 80% chance that there will be a recession in 2023. And I tend to agree with them on that. I think 2023, guys, is going to be a really bumpy road for our economy and for the stock market. But don't let that worry you, though. I think if you are looking to build wealth, then 2023 is going to be a critical year. Short-term interest rates will start decreasing in late 2023. Matter of fact, it'll be fourth quarter 2023. You'll see a 50 basis point decrease in short-term interest rates. At least that's what Deutsche Bank is predicting. And then they're also predicting in 2024, there will be 150 basis point decrease in the short-term interest rate. And guys, if that happens, the stock market is going to take off. That will be the beginning stages of the new bull market. And all of these investments you guys are buying right now at a discount that I've been telling you guys to consider for months now, all of those blue chip individual stocks, blue chip ETFs, and those blue chip index funds you've been buying over these last 7-8 months, they will continue to go up in value as the new bull market kicks in, I believe sometime around the tail end of 2024, going into 2025. And if that happens, man, my net worth is going to go up tremendously. I believe my net worth is going to go up by 40% if that happens. All of the discounted paper assets that I've been buying over this last 6 or 7 months, and I'm going to continue buying all through 2023. And that's what you got to stay focused on, guys. You got to stay focused on buying assets at a discount, but not just any old assets. You got to buy blue chip, right? If you do that and you prepare yourself mentally to hold those investments and get through the choppy, bumpy 2023, when we come on the other side of this thing, I believe in late 2024, going into 2025, when the next bull market is going to take off, our investments, man, are going to go up in value, in my opinion. Again, guys, I'm not your financial advisor. I can't guarantee anything, but what I will tell you is I do believe in that process because I've done it for the last 22 years through different bear markets. And then obviously on the other side of that bear market is always a bull market. So that's what I've experienced in my last 22 years investing in the stock market through dollar cost averaging. And I believe that's what's going to happen here real soon. Like I said, 2024, 2025, we will see that happening. Now, Deutsche Bank doesn't have a crystal ball. These guys are just making predictions and who knows what will happen. But I kind of tend to agree with them on the 200 basis points because at some point, the Fed has to throw the stock market a bone, right? They have to, especially if they have clear evidence that inflation is coming down, right? If they got clear evidence that inflation is coming down, they have to throw the stock market a bone, and that bone will come in the form of 200 basis point decrease in short-term interest rates so that investors can start pumping money back into the stock market. Drop me some comments down in the comment box and let me know what you think about Deutsche Bank's prediction. They predict 200 basis point decrease in the Fed funds rate, AKA short-term interest rates, 50 basis points coming in December of 2023, and then 150 basis points coming in 2024. Curious to know what you guys think about that. And do you believe it will trigger the next bull market? If you want those 12 free stocks from Webull, click on the link down in the description box, guys. What are you waiting for? Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business.
If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.